I'm not trying to get to wealth in 30 years. I'll be 60 years old. I'm trying to get there as fast as freaking possible so I can enjoy it. I had to break the mindset of buy a house, put a tenant in it, 30-year fixed rate debt, and let them slowly pay it off. We're trying to multiply our wealth. Okay guys, what's going on? So what we're doing today is we're kind of just letting you see inside the real life of owning real estate and trying to essentially grow an empire with it. So I've talked about before, I'm under contract right now to purchase a larger apartment building, 56 units. I can't tell you any of the details of it because we're under contract, we have NDAs, all that good stuff. We will show you the full property once we close on it in the coming months here. So I have this opportunity to sell some of my smaller properties. So something I want to teach you is single families, rental properties are 1 to 4 units. Multifamily is 5 units and above. I own several single family units and we own apartments. What we're looking at doing, and actually we have one listed, is selling some of our single family rentals to trade into bigger apartments. Essentially the formula for wealth creation is found in monopoly. You buy good property, you buy good locations, you put green houses on, but then you trade those green houses up for a red hotel. That's what we're doing in real life here. I bought good single family rental properties. They've done okay, but apartments can grow so much faster. If you've watched our other videos, if not, go check them out. We talk about how you build wealth with apartments. It's a different game. It's all an NOI game, net operating income. I'm gonna drill it into your head over and over again that net operating income is the way to build wealth. If I can increase my income, decrease my expenses, increase my NOI, that's how I build wealth. Everything's for sale right now. We are looking at selling off some of our single families, not paying tax on the gain because of a 1031 exchange, putting it in a 1031 exchange, taking the equity from there and trading up to a bigger apartment building. And then from that bigger apartment building, we can do it again and again. That's the formula for wealth creation. So I got a couple calls I have to make. We're gonna kind of just bring you along with me today. Again, guys, if you enjoy this, we're really showing you inside our life. We're not, I don't like super scripted things. We're just living our life. We're building our portfolio. We're running our businesses and we're bringing you along with us so you can really learn from our candid real life experiences. So if you enjoy it, be sure to hit the thumbs up. Be sure to leave a comment. Be sure to subscribe. Go jump on some calls. Then after that, we're going to go jump to our single family rental property that we're selling and exchanging up for an apartment. Let's go. Guys, so we're here. This is actually the second investment property I ever bought. I was just telling Nick, I own the house right down there. This is where it all began for me. So we're at the rental property here. So we're gonna go walk through, just, make sure we're all good. We've already got it listed. So it's listed with my wife. There she is, showing Ange down there. She hustling because they actually have a house for sale over here. So we're looking at it. So guys, a big thing to understand is the difference between single family debt and multifamily debt. So like single family rentals, traditionally, you buy them in your personal name. Okay. So like if you pull my credit report, you will see my single family rental homes, like the mortgages on there, as personal debt. Now, when you rent them out, there's cash flow and it's positive cash flow if you do it right. But the thing I love about multifamily investing is it's business debt. So I borrow the money for the multifamily and for the apartments in an LLC's name. Like when I borrowed the money for the mortgage from the lender, it goes in my personal name. So it's personal debt versus business debt. It's a really, really powerful tool. So like when you pull my credit report, none of my apartment buildings are on there. So that's kind of one of the reasons why we're trading out of single family and moving to apartments. Let's go check out the property. Let's go see. I haven't been in this in 2-3 years. All right, so we're here inside the rental property. So something I did do, this one I did a minor upgrade to. So something else too, like I told you in some of our other videos, we look for apartment buildings we can add value to. We can force appreciation. There's 2 types of real estate investing. There's parking my money. So buying, and essentially what I did without knowing what I was doing in the beginning, I bought rental properties. I bought a house like this. I own this house, right? I fixed it up a little bit. So I put the vinyl plank flooring in. We did the basement. We'll go down there. I'll show you. I put nice, and when I say I didn't do it, but we put nice like gray contractor paint, like a nice high-end paint in here. But I bought this property for $232. We're listing it for $335,000. So it's $100,000 in 2 years. But I mean, that's not substantial, it's a good gain, but it's not substantial. It's not like I bought a house for $100,000 and made it worth $500,000. But with my apartment, like my first apartment building, I bought that for $660,000. I made it worth $1 million in less than 2 years. Those are the types of things we're looking for. We're looking for value add real estate. So understand, when you just buy a property a little below market value and there's not big potential in there, You're not like, I can rip down walls and make it so much bigger, so much more valuable. You're kind of just parking your money. Now, I bought this in the beginning of the pandemic. So if you know anything about real estate has rapidly appreciated since then, and I bought in a really good area. So obviously making $100,000, is that something to boo-hoo about? Of course not. Of course not. It's really good. But I'm taking that money, and like I said, we are going to put it in a 1031 exchange into an apartment building that I'm buying for a few $1,000,000, and I'm gonna make a few $1,000,000 on if I run my business plan properly. I had a conversation with a gentleman named Ben Mala, really cool guy. I found him on YouTube. I paid the money to do a consultation call with him, so just a one-time call. So again, hey guys, if someone out there knows more than you do, he is 50 something years old. He owns a quarter billion dollar real estate portfolio, all with his own money. Never took outside capital. Does it all in his family. So of course, that's like the vision of my wife and I are on. We don't syndicate, we don't take outside capital, we use our own money. So I booked a call with him and I told him where I was at. I said, hey, I own 87 units, about 12 million in real estate. I want to grow. He owns large apartments in Florida. He owns retail space in Florida. And I'm like, here's my net worth. I showed him my PFS, my personal financial statement. I showed him my rent roll, all my stuff. And he's like, you gotta trade up. He's like, you have a lot of money in equity in these smaller properties. He's like, look at the cash flow you get monthly, then multiply it by 12, get your annual cash flow. He's like, multiply that by 10 years. If you sell the property today, this is golden advice. So if you're scaling a real estate portfolio, take this advice because I paid for this. It's really good. If you can sell it today and make more money than 10 years of the total cash flow, sell it. Because he said, I would rather take that money today versus wait 10 years to get it, because then I can take the money from the deal, from the sale, go put it in a bigger property and do it again and again and again. And guys, I had a huge epiphany in that moment. I was like, you're right. I was being emotionally attached. I was like, I like this house though. I like the walls. I like the hardwood floor. It was my first investment property, but we're real estate investors. This isn't my home. This isn't where I'm raising my family. This isn't where my dog's playing. My wife and I make memories. This is an investment. And Ben really said to me, he said, I would rather have $1 million today than $8,333 a month for 10 years. And I'm like, you're absolutely right. Because he goes, I can take that $1 million today, go put it in a deal and make it worth $2 million. And that's what really resonated with me. So I paid for the advice. And again, guys, if you're gonna have a mentor, listen to your mentors. Don't just say, oh, okay, but no, I like my house. No, so I said, you know what, you're absolutely right. I told Andrew, as soon as the tenant moves out, we're listing it for sale. Not being emotionally attached to investments. These are investments. They are pieces of a puzzle. It's no different than like a stock or whatever else. That was a big thing Ben said to me, and it really resonated with me. He said, constantly work your portfolio. He said, if you can sell anything for a profit today, he said, don't ever cry about taking a profit. I love that. Something else I've heard or read is you never go broke taking a profit. So we actually have this for sale plus a duplex for sale right now. And we are looking at selling off anything in our single family portfolio to trade up. So hopefully that shares some perspective about it. I read this book when I was coming up in real estate. It was by Gary Keller, and I love Gary Keller, Keller Williams, right? The Millionaire Real Estate Investor, great book. I highly do recommend it because it's really good and fundamental. But it was a different mindset. It was buy a property, put a tenant in there, put it on a 30-year fixed rate mortgage, which this is on. I think, what's my interest rate on this? 4%? Stupidly low right now as an investment property. That's stupidly low because investment properties are always a little bit higher than a primary residence. And Gary Keller said, let the tenant slowly pay it off. And in 30 years, you'll own all these rental properties paid off. I'm not trying to get to wealth in 30 years. I'll be 60 years old. I'm trying to get there as fast as freaking possible so I can enjoy it. So I had to break the mindset of buy a house, put a tenant in it, 30-year fixed rate debt and let them slowly pay it off. We're trying to multiply our wealth. So we're saying, let's get our money off the table. Let's go into apartments that we can multiply and grow faster. It's called the velocity of money. How quickly can I move my money from deal to deal, getting bigger and bigger and bigger? Nothing wrong with getting a few properties and slowly having them pay off. If I wasn't trying to do this as my full-time business, I would be, slowly paying them off. But it's different. Do you want to be an active investor with your portfolio or passive? So I bought it for $232,000. I think all in, we put about $10,000. We had, I mean, this is nice paint. This isn't like your typical like cheap paint. This is like a nice high-end paint. We did the floors in the kitchen because it was some nasty tile in there. And then we actually did the basement. We finished the basement. We put in a full bath and flooring in there. So I think all in $242,000, and we're looking to sell for $335. My wife thinks we should have a good, maybe even bidding war on it since there's such low inventory and this is such a desirable area and neighborhood. We can definitely even update in a future video what we sell it for. So I think we're all in about like $242 and we're listing for $335, hoping it goes a little over. So the 1031 exchange is a US tax code that incentivizes real estate investors to keep investing in real estate. The beautiful thing about our country is US government wants private citizens like you and I to own real estate. So they give a lot of tax benefits to real estate investors. So if I were to sell this property and just take the money, I'm gonna pay what's called capital gains on it. I think it's 20, maybe even 25% off of the sales price. So that's after I already paid the real estate commissions. I need concessions, then a capital gains hit, that sucks. But if I put in what's called a 1031 exchange, so I have to pay a third-party company to come in, essentially be an intermediary. They hold the funds. I paid them, I think, $1,500. It goes in a 1031 exchange fund. I do not pay capital gains. So I avoid 20, 25%, whatever it may be. I have 6 months to then go find a replacement property to put that money into. So that's what we're doing with the bigger apartment we're buying. So I don't ever see the money. It never comes to me. It's weird. I'm at a closing table and I sign papers, but I don't get the money. It goes in that fund. So it's a way to compound wealth. This is how like generational wealth is built, because you can scale up and you can multiply your money and you can grow without paying taxes. All right, guys, so hopefully you enjoyed the video here, really just showing you again inside of a life of how we are actively growing our real estate portfolio, how we are playing the game of Monopoly in real life, how I started with a single family house like this and now how we're trading up into multifamily and actively growing. As always, if you have any questions about anything we talked about here, leave a comment in the comment section below. If you like the video, be sure to hit the thumbs up. If you don't like the video, let us know too. If you don't like Nick's editing, let Nick know, let us know in the comment section. We're always trying to grow and improve the channel. If you have any questions about, again, anything we're doing here, let us know, hit the thumbs up, be sure to comment, like, and subscribe. If you enjoyed the video, share it with a friend. That would mean a lot to us if you can share the channel. Hey guys, too, if you want to learn more about this, I wrote a book, so it's called The New Rules to Financial Freedom. It sells for 19 bucks on Amazon. You can get it absolutely free as a digital download. Click the link below. It's all about how I built my business up, how I grew my earned income and my cash flow, and then invested in passive income producing assets like real estate here. And until next time, my friend, we'll see you at the next video. Talk soon. Thanks. Bye.